Right. So we have what you call a Fibonacci, and this lecture is specifically about that, specifically about the Fibonacci. So a Fibonacci is a retracement trading tool. Right. Now, what is a retracement? So as we have always said, we have uptrends and downtrends. And our uptrends, they go like so. Sorry, come on. I want another 2 here. Sorry. Okay. So these ones are what we call retracements. These points over here. Sorry. I didn't really. Okay. So these ones are what we call retracements over here. Right. So retracements, they happen on an uptrend or on a downtrend. And the reason why these retracements happen is because, say we are in a buying direction here. Say we are going in an upward direction, we are buying, right? Most sellers, most buyers, they set their take profits, say around these areas, around these areas, around these areas. So when our trend or when our graph tends to come to this position, take profits are hit here, taking out quite a number of buyers, thus making the market breathe a little. Let's call it breathing, okay? So the market breathes a little, a number of buyers are taken out because their stop losses have been, their take profits have been hit, so their orders automatically close. What does this mean? This means that we now have a less number of traders in this trade, trading with the trend. Thus the market breathes a little, right? A pullback doesn't mean a change in direction here, but it means that take profit orders have been hit. And now buyers are now trying to find new points to what? To continue buying with the uptrend. Okay. So this is why these retracements happen. Say we are in a downtrend. This is a downtrend, okay? Whereby we'll be breaking our highs and our lows. Breaking of these highs and lows, remember we said it means, or it gives us confirmation that our trade is actually going in a downtrend or is actually going in an uptrend. So for a downtrend, these are the retracements for a downtrend, okay? These are the retracements for a what? For a downtrend. Here. These are the retracements for a downtrend. Okay, get that clearly. So now, retracements now are made of highs and lows. What does this mean? Let me rub here and explain what I mean. They are made of highs and what? And lows. Meaning, we have a high, we retrace, we get a low, we continue with the upward direction, breaking the previous what? The previous high here. We get another high. We have a low. We break the previous high, going with what? With a new what? Direction. Okay. So let me actually text here so that we can see. This is the high. This is the what? The low. This is the high. This is a low here. Then we come and we set a new what? We set a new high. Setting a new high means we have to get a new what? We have to get a new low, right? Remember we said when we set new lows for our uptrend to remain valid, we are looking forward for our trade not to break our previous support or our previous low point. Hence, it mustn't break, it must respect the previous high here and then continue in the upward direction. So here is where the Fibonacci tool now comes. The Fibonacci tool is what we call retracement levels. Okay, get this very clearly, guys. It has what we call retracement what? Retracement levels. Meaning that we are able to measure a certain retracement and when it's expected, when our trade is expected to respect a certain retracement level and then continue going in the intended direction. So now we have what we call the 100% retracement level. We have what we call the 61.8 what? Retracement level. These go in sequence. We have what we call the 50% what? Retracement level. We have what we call the 38.2 what? 38.2% retracement level. We have what we call the 23.6% what? Retracement level. And then we have what we call the zero. Sorry, we have what you call the zero what? 0% retracement level. Now, I want you to take note of this, guys. When we are using a Fibonacci, we are using it to measure a retracement. Okay? We use it to measure a retracement. Hello? Hello? I'm okay. I'm okay. Sorry. Um, okay, sorry for that, guys. Sorry for that. Let's continue. Now, as I was saying, this is how the Fibonacci looks like. And the way that we use a Fibonacci, when we are in an uptrend, please, this is where most people get it wrong. And then I'll show you on the chart. When we are in an uptrend, when we select our Fibonacci tool, let me change color like this so that we can actually see. We place it from the bottom going up in the case of an uptrend. What does this mean? This means that we have to spot a low first and a high like this. Let me show you. We have to spot a low and a high of that low, and we place our Fibonacci from the low going to the upside. Now, when we place our Fibonacci, guys, our 100 should be here, and our 0 should be at the high in case of an uptrend. This will be our 0%. Now, what you see happening is your 60% level will be somewhere, your sorry, your 0% level will be here, your 23% level may be somewhere here, and then your 38.2 level here, your 50% level here, then your 61.8 level somewhere here. This is how your Fibonacci would be looking like. So please take note of that. And when we are in a downtrend like this, when we are in a downtrend like this, a downtrend like this, sorry for that. When we are in a downtrend, we are actually looking forward to spot. Now we have what we call lower lows and higher lows, whereby our lower lows will be here and our higher lows will be here. So what we're actually going to spot is we want to spot a higher low here and a lower low here. Remember, we said we go in direction with the trend, and when we place our Fibonacci, our 100% will be here at the top and our 0% will be here at the bottom. And then we have our retracement levels. So most retracements, they happen in this area zone. 61.8, 50%, and 38.2% levels. This is where most of our retracements happen. Okay, so let's go to the chart now and I'll show you why I am really teaching you about these Fibonacci retracements levels. Now, as you can see, we have this trade over here. We don't want to go anywhere very far, but we just want to look at what you can see here. This is Nasdaq. As you can see, we were in an uptrend. So we had the low and we had the high here. We had the retracement and then it continued going to the upside. So for us to be able to trade this retracement, we had to first spot this low and a high of this low. And you come and you select your Fibonacci retracement 2. You touch from the low to the high. And as you can see, it automatically shows you the retracement levels. This is my 100%, this is my 0%, and my trade retraced back to 61.8% level. It continued going in the what? In the upward direction. Okay. Let's look for another scenario whereby we have a low and we have a high. We select our Fibonacci 2. We touch from our low to our high. Where my 0% level lies. Remember what I said, most retracements, they happen on the 38.2, 50, and 61% level. And as you can see, my trade came bounced on the 61.8% level and then it continued going in the upward direction. So this is how you place your Fibonacci 2 and this is how you trade retracements. Okay, let's look for another scenario for a sell buyers trade. As you can see here, we were falling, we were in a downtrend. So what we actually wanted to do, let's say this is Nasdaq. We would spot a high and a low. In this case, we have a high here. We have a higher low and a lower low. You would come, take your Fibonacci 2, come from the upside, and then as you can see, it fell, came back, retraced on the 61.8% level, and then it fell down. Okay, so basically, this is how you want to trade retracements. Okay, let's look at this high, lower high, and this low point for it, or we can even look at this one here, whereby we would actually take our Fibonacci, fall down with it, and as you can see, remember we said most retracements on the 50%, 61.8 and 38% came and retraced. Say maybe you wanted to choose this as your low. What happened? It came back and retraced on the 31.2% level, 38.2% level. Okay, I think maybe you might be confused. I've actually put a lot of Fibonacci's here, so let me delete this one so that you can actually see what I mean. We have a high here, a low here. It retraced back to the 38.2% level and then it fell. To precisely mark this point, we can also do this. Or if you want to extend it on a very large scale, you can also do this. Here it came and retraced on the 50% level and then it fell. Okay, we have another scenario here. This is a ranging market though, but we have a high, we have a low. We put our Fibonacci bottom up. What happened? Exactly on the 61.8% level and then it fell. Remember, if you are too quick to notice, this is a 4-hour chart. Okay. So basically, this is how you trade retracements. Now, a Fibonacci now is what we call Fibonacci extended levels or Fibonacci extensions. And these extensions can actually help us to know our take profit points for a certain trade. And how can they help you to know your take profit point for a certain trade? Let's come back here. Let's go back and come back here. So, let me remove all this so that you don't confuse us. Let me delete here. Let me delete again. Okay. So, say we were trading this trade. Remember, we spotted that our trade was in an uptrend. Our hand rate will be at the bottom because we said we take our Fibonacci. For if we're in an uptrend, we take it from down up, and if you are in a downtrend, we take it from up down. So when you notice a retracement and you enter a retracement, like in this case, if you enter at 61.8, the Fibonacci are not only going to be doing it today, they're also going to do it tomorrow because it's actually a very bigger topic. But to those who want to be curious, you can read ahead. So what you want to do now is you want to do the opposite. If you want to take your, if you want to spot your take profit point, this is what you do. Now I want you to see something. When you enter at 61.8% level, you exit at 61.8% level. And in this case, as you can see, it exactly came on and hit on your 161.8% level, and then it fell. It respected this area. So if you enter also at say you enter at 50%, let me remove this. I'll share a Fibonacci with you. That's actually that I'll actually recommend you to use, because this one is missing some points, like the corresponding for 50, for 38.2, for 23.6. So the one that I'll give you will be telling you 123.6, 138.2, and so on. So when you enter at 50%, you would want to exit at the corresponding level for 50%. When you enter at 38.2%, you want to exit at a corresponding level for 38.2%, which is 138. Okay. Now, so I want you to really get this, guys. So now you have entered your trade. Okay. Say you have entered your trade. Um, Let me put another Fibonacci. Let me delete this one. Say you have entered your trade at 61.8% level. We also have another 78, 72 something, 72, 70 point something percent level on the Fibonacci that I'm going to share with you. If you see your trade not respecting the 61.8% and it comes to the 70 point something percent level, then you exit, because usually it tells you that your trade is now going to be invalid, and most probably is going to come and break these previous lows. So that might mean a change in direction. Now, remember we said retracements don't mean that our trade is changing direction, but when our Fibonacci is telling us, no, you are around now the 70% or in between 70 and 80% level, then that means that there's a probability that at any chance you might break any previous lows and then change direction, or you might break any previous highs and then change direction. Thus your trade will be violated. Is there anyone who's not understanding right now? Is there anyone who's not understanding right now? Beverly,
Yes, sir.
is everything sinking?
Yes.
Mr. Edward,
Yes, coach.
is everything sinking?
Quite well.
Yeah, coach, you are not teaching me. Coach, coach. Tracy,
Just hungry for knowledge.
What?
coach, you said I'll give you corona.
Azvunzikisa coach tazvidzwa.
Okay. The funny part is everyone in this group is almost saying, say, mukutiregerera. Beverly wese, Edward wese, Tracy wese, Tino my wese. So I have issues with almost everyone in this group. So now let's do this. Let me zoom out a bit. So now what you must also understand is, remember I was on my H4. The same principle can be applied on your H1. The same principle can be applied on your M30. The same principle can be applied on your M15. I don't know now. For the guys that have actually been reading or following up videos, did you watch the BTMM side of the videos that I was posting? Is there anyone who didn't do levels in here? Do you have anyone who didn't do levels? We both did levels. Okay, silence means okay. So I'll rename the videos that I posted on Telegram, and I'll recommend you to watch to the one that we did levels, so that you can actually spot the levels and know how to be able to work with them. But now, just listen to what I'll be saying. Now, using a Fibonacci now, it helps us to know levels. Hello?
Yes, sir.
Okay. Knowing these retracements, they also help us to know levels and how to trade levels. I know someone might be laughing with how do we know levels with this thing? Okay, what I basically mean is we can be able to trade a certain level. Like, as you can see here, we can actually say we have a flag here right now. We can actually mix concepts to come up with one thing that is very good or edit confirmation. So I just noticed a flag here. The problem with me is whenever I do these Zoom sessions, I don't really write down. I just dish out the basic information that I have and try to find things on the charts. And as you can see, we have a high here. We can see this is a strong downtrend. Why is this a downtrend for us? Because we are leaving higher lows, and failing to break them. So we might actually want to come and take a Fibonacci to know when this flag is going to end. So we take a Fibonacci, and as we can see, the flag ended here, whereby when we came and we hit the 50% level, we retraced back to the 50% level, and then we went to the downside. Okay, if you think these are jokes, guys, this is actually information, or this is actually things that are happening on the charts every day. We have another high here, we have another low here. We take our Fibonacci, we come, we place it on the higher high here, let's call it just a higher high, and then it came back, expected the 61.8% level, and then it fell down. Now, as we said, you will be having your, let me demarcate here. You will be having your 70 something percent level somewhere here. And I want you to notice something. This is a high. And the moment that it comes and breaks this high, it's entering in the 80% and the 70%. level zone, which is somewhere here. Now, we both know that breaking of previous highs means that your trade has been violated. And when it breaks, it's now going back to the 80 and 70% what? Level zone. Now telling you that you have changed the direction. You are now in an overall bias. Is there anyone who didn't understand here where I mentioned here? Okay, so if you understood, then it's okay. If you understood, then it's okay. My Zoom is running out of time right now, but now I have this assignment that I have for you here. This is 7:38 p.m. By 8:30. Can you please, let's do things that we haven't been doing before. We want to get familiar with them. Let's mark for DJ 30. If you don't know where to find DJ 30, download AvaTrade. You are also going to need AvaTrade. We've always said that we need to download AvaTrade. For DJ 30, go in your H1 time frame. For the past 3 days, can you please draw me Fibonacci extension levels, screenshot them, and then send them to me? And then for Euro USD, do the same thing also. Screenshot them and then send them to me. Send them in my inbox, and then I will post them in the group. Because if you post them in the group, I know you guys you copy each other. But last time, then
Yeah, bakaiwa.
so can you please do that? Thank you for this Zoom session. Do that by 8:30, and then I'll mark your assignments. Have a good night.